In this video, I'm going to explain real estate taxes. What do you need to know as a new investor? Let's find out. Hi there, my name is Michael. I'm a broker and real estate consultant in New York State, and I make videos on the Mashvisor channel 3 times per week where we talk about all things real estate and real estate investing, and that includes traditional rentals and Airbnbs. So I'm glad you're here. If you like this video and you want to see more like it, please do consider subscribing below. Hit that bell icon and make sure to give us a thumbs up, because that tells the internet this is valuable, well-considered real estate content. And if you're a real estate investor, please leave us a comment about what you find the most challenging about filing your real estate taxes. And we'll make a compilation video and put them on our Instagram. In the first half of this video, we'll explain some of the basics of real estate taxes so you can confidently navigate them as a new investor. And in the second half, we'll talk about a few more advanced tax terms that you may encounter. So let's get started. Let's start with the basics. Many new to investing wonder if rental income is taxable. Yes, rental income is taxable. However, this doesn't mean you have to pay taxes on every penny that you earn from your tenants. And we'll mention some exemptions later on in this video. What is considered rental income? Any payment you receive for the use or occupation of a property is considered rental income. This includes payments in the form of rent, advanced rent, and fees to be paid to a property manager. Now, having said that, security deposits are not taxable, and this is because they are considered to be a prepayment of rent. As a future investor, you may be wondering what expenses you can deduct. There are several deductions that you can take as a rental property owner. For example, you can deduct repairs and maintenance costs, replacements, advertising and marketing expenses, insurance and cleaning costs, utilities, and property management fees. You can also deduct depreciation of your property and the interest on your mortgage payments. Something that will help you navigate the real estate investment process is keeping your records organized. You need to document everything, every penny. Even if it's a $2 light bulb, it should be accounted for somewhere in your records. And this is because if your return is selected for audit, you may be subjected to additional taxes and penalties if you can't provide evidence to support the reported items on your tax returns. I was once told to maintain records as if I was leaving a trail of evidence for others to follow. And it might seem silly because you're just starting out and you may not be reporting all that much income, but in time, as your business grows, that may change. So it's best to get yourself in the habit of self-protection now. Some things to keep track of. All tenant leases, any type of permit or official documentation received that are new to the property in the past tax year, any and all incorporation documents, insurance documents, mortgage and bank paperwork, past year's taxes. I would actually have the past probably 5 years worth of tax filings just to have on hand, and ownership documents such as property title and deed. How to track your tax-related data. Some people still do their books by hand, and there is absolutely nothing wrong with that. For taxes, just be sure to record the time and date of when the income was received, or if it was an expense when it was paid. And track who paid or provided payment and the nature of the transaction. If it was a rent payment, try and record the check number or a bank statement. Again, anything you can use to track the transaction at a later time. Hey there, let's take a second and talk about the sponsor for these videos, Mashvisor.com. Mashvisor is a platform for real estate investors who want to streamline their search and analysis of traditional and short-term rental properties, like Airbnbs. Investors can search by the potentials of neighborhoods, by mortgage type, by investment strategy, and so much more. And everything on the website comes with analysis. Things such as cash flow, occupancy rate, and cap rate are all there and calculated for you. Mashvisor even estimates expenses like utility costs and cleaning fees for your area of focus. So it's a really great tool to have for both big investors and those just starting out in the business. Get a free 7-day trial and 20% off your membership for life by using the code VIDEO. All right, thank you. Let's get back to the video. So now let's talk about a few more advanced tax terms that you may encounter now that you're in the real estate business world. Appreciation in the real estate world means an increase in the value of a property over time. And that's one of the great benefits of investing in real estate, that values should go up with inflation. After you sell a property, you have to pay all the real estate taxes if you're not reinvesting the profits. However, one of the most tax efficient methods to build wealth in real estate is by not selling at all. And this is because real estate appreciation doesn't get taxed by the IRS. So buying and holding is the best way to get the most value and return from your investment property. Another area where taxes come into play in real estate is with opportunity zones. Opportunity zones are designated geographic areas that have been identified as low income. And the government offers incentives to investors to try and draw them to areas in need. One invests in opportunity zones through a vehicle called an opportunity fund. Here's a quick breakdown of two of such incentives. So if you hear people talking about it, you know what's going on. First, an investor benefits from a temporary deferral of capital gain tax if you sell a property and reinvest the gains in this way. You'll pay taxes on deferred gain either when this opportunity zone investment is sold or when the program expires on December 31st, 2026, whichever is first. Second, you gain permanent exclusion of your taxable capital gains from the sale or exchange of an opportunity fund investment, but only if it's held for at least 10 years. So, for example, if you bought one of these properties for 200 grand and sold it 11 years later for 500 grand, then you would pay zero tax on that $300,000 of capital gain. So that's pretty cool, right? The last tax term you may hear of that I want to discuss today is called a 1031 exchange. And it's one of the most advanced tax models that you may encounter as a real estate investor. It's named after Section 1031 of the U.S. Tax Code, and it's where property investors can delay paying taxes when they sell investment properties. The way it works is rather simple. After you sell your property, you use 100% of the profits from that sale and you reinvest it into your next property. So basically, the 1031 exchange allows you to trade one piece of real estate for another without having to pay real estate taxes. To qualify, you must meet the following criteria. Number one, the new investment must be of the same character, nature, or class, meaning you can't sell a residential property to go and buy a commercial one. Also, the value of the property must be equal or greater to the old property, and this is known as a like-kind exchange. Number two, the real estate investor has to identify the second property within 45 days of selling the first. The investor has 180 days to close that deal. And that's the way it's put on the IRS website, but it's a little confusing, so let's revisit this. The 45-day and the 180-day time periods actually start at the same time. You do not get the whole 180 days after identifying your property, though that would be great, but it's not the way it works. So if you're looking for this kind of transaction, just keep a calendar handy and keep your time frame in mind. And number three, you can't handle the money or this kind of transaction independently. You have to have a qualified intermediary do so for you. So there you go. That's real estate taxes explained, what you need to know. Again, if you like this video, please be sure to give it that thumbs up, and of course subscribe to our YouTube channel here, and check out Mashvisor.com. They have thousands of listings across the United States that can help you find the perfect investment property or traditional or short-term rental, like an Airbnb. And it all comes with analysis so you can make a wise investment choice. You can get a free 7-day trial with no obligation by following the link in the description. As always, I'm Michael Jones. Check me out on Instagram. It's Michael Talks Real Estate. Thanks so much for watching, and I'll talk to you soon.